Hi everyone, this is Justine from Impero Property Solutions. So just hopping on to answer a question that we've been asked quite a lot this week, which is around whether or not you should buy your buy-to-let properties as an individual or as part of a limited company. So a few thoughts on that from us as property experts. Bear in mind, we're not accountants, so I'll caveat that if you're thinking of taking this really seriously, do talk to an accountant. And while we're on that note, please make sure that your accountant is an expert in property. Not all accountants are equal, so do check the credentials of any accountant that you're hoping to use. So our thoughts on it: do you buy as an individual or a limited company? Very much depends on your income. If you are not a higher rate taxpayer, so you're in the lower tax bracket, it's possibly better off that you buy the properties as an individual. Do bear in mind then that any profit you make from that property will add to your annual income. So if you think that's going to remain at the lower tax level, so under 50,000 a year, probably better off buying as an individual. Do bear in mind your future plans. So if you have aspirations to buy several properties, bear in mind how that will affect your income and whether or not it's likely to push you over that £50,000 tax and into higher rate tax bracket. So do think about that. Outside of London, we'd probably say that properties in the areas that we're specialists in, which is the Midlands of the North, probably earn you 4,000 to 5,000 a year. So if you're planning on getting 5 or 10 properties, do factor in that extra amount to your overall income and see where that's likely to land you in the tax bracket. On the other side of things, if you are already over that tax bracket 50,000, so you are a higher tax rate payer, then you might want to consider putting the properties as part of a limited company. There are obviously pros with that. It doesn't affect your tax liability immediately, but you do have to bear in mind how you can then get the money out of the limited company at a later date when you so choose. So if your company is in profit, then you can pay yourself a dividend. That's one way to take the money out of the limited company. Or what you might consider is at a later date paying yourself a salary. Obviously, doesn't really help you out if you're a high rate taxpayer, but perhaps if those properties are a bit of a nest egg for when you retire, and at the point you retire your income is likely to drop, then obviously you can pay yourself a salary from the company. Another advantage is if you are considering your properties as an inheritance vehicle, you've got aspirations to pass them on to your children, then again there are advantages in having the properties in a limited company. And definitely speak to an accountant about that, about the best way to inheritance plan, but that is definitely worth considering. So they're broadly, they would be the advice that we would give to people when considering which way to go. Speak to an accountant, they give you all the best ways around it, but broadly speaking, that's the main thing you need to consider. So I hope that gives you a bit of a useful steer, certainly a starter for your thought process, and we'll look forward to speaking to you soon. Don't forget to subscribe to our YouTube channel or do look at our website. Speak to you soon. Thanks.